Hi there, welcome back to Chaos Stock Portfolio. Just want to do another weekly update on ARK Invest. So we'll start off with the ARK Invest stock commentary email. So I just want to go through two stocks which have took my interest this week. First one is Workhorse, stock ticker WKHS. Workhorse is a technology company that designs, manufactures, builds and sells battery electric vehicles and aircraft in the United States. It traded down 47% on Tuesday and then up on 24% on Thursday. Now this is really interesting because the downward turn was linked to the fact Workhorse lost the US Postal Service's next generation delivery vehicle contract to a company called Oshkosh. Now the stock traded up again 24% when the Democrats, a representative of the Democrats attempted to overrule the contract award to Oshkosh, which obviously led investors to believe there might be a chance for Workhorse to get back in. And there's a comment here that ARK finds it odd that USPS is not committing to a fully electric platform, which according to their research will dominate truck production and sales in the next 10 years. So this is in the electrical vehicle space. It was a huge downswing and then a huge upswing, which just shows how volatile these stocks can be. So it'll be worth keeping an eye on that over the next few weeks. The other one I want to just draw attention to is Organovo, stock ticker ONVO. I actually sold out of this stock with a double-digit profit. I just felt it was too volatile, and actually ARK Invest seemed to be selling out consistently, so I got out of here. But Organovo is a biotechnology company focused on 3D bioprinting. It traded up at 23% on Wednesday, possibly because investors and speculators may be gaining confidence in their ability to maximize its 3D bioprinting assets and deliver on a revitalized commercial strategy. ARK Invest believes that shares will continue to be volatile until the company reveals more about its path forward. So that's quite a standard line that it trots out every week. I think the most interesting thing about this email is the amount of companies that have been missed out. It's been such a crazy week, certainly a week full of fear. And actually Cathy Woods, there's a link in this email. Cathy Woods has posted a video, which I'll just quickly show you. So I've just sat and watched this morning. It's about 35 to 40 minutes long, but it's definitely worth a look. I just wanted to go through some of my keynotes. Basically, Cathy has said that she believes short-term fear in the market is good. She actually likens it to 2016-2017 when value stocks moved higher. Around the time Trump was coming into power and interest rates, bond yields were increasing at that time. So she sees this as a similar situation. She actually believes this is a good thing. So in essence, the correction on innovation stocks is good, and she certainly believes that it is not expected to last long, and that continues to be her conviction. She also talked about Bitcoin. Obviously, Janet Yellen has said quite a lot this week about Bitcoin, particularly negative comments, I would say. And Cathy Woods in this video was pretty clear in stating that she does not believe Janet Yellen understands Bitcoin. She actually broke that down in detail. She addressed the issues around it not being good for the environment, not being efficient and sustainable, and also the volatility aspect. So definitely worth a watch if you're interested in Bitcoin. Very much standing in the corner of Bitcoin in this video. She talked a lot around interest rates and price to earnings ratios, and talked about why high multiple stocks are being hit hard at the moment. She also talked around deflationary forces, both good and bad. So good deflationary forces were those around technological innovation, where technological innovation is allowing the cost of goods to come down. through breakthroughs in innovation. She also talked about bad deflationary forces, which are where highly leveraged companies are carrying out these share buyback deals, dividend payouts. She believes that these highly leveraged companies will at some point need to cut their prices to cover their debt, which effectively causes, in her view, bad deflation. She expects all of this to cause short-term confusion to the normal world order, and that's set to continue, but she believes that's going to happen in the short term. She also tried to address the discussion around liquidity in the ETF space. So she spoke from her personal viewpoint as a portfolio manager of a equity ETF, and she spoke about the differences between equity ETFs and the types of ETFs that were more linked to the bond markets back in 2008, 2009. She expressed surprise at the commentators. I think she specifically mentioned Morningstar, but I think she was talking more broadly in her surprise about some of the commentaries that have been going on this week about ETF liquidity, and I think she was seeking to give confidence to investors in her ETFs. So I think she was a little bit annoyed that the commentators were feeding fear, and they simply didn't seem to understand the difference between her ETFs and those seen in 2008-9. So really interesting. She praised her team again. She said that the ARK team was doing a fantastic job, and they certainly maintained confidence. And she also sort of committed to another talk in a couple of weeks' time. So I think it's excellent. The transparency from ARK Invest needs to be applauded. I think they don't need to do this, but she clearly does. And I have invested in a number of, being based in the UK, I can't invest in ARK ETFs direct, but I can invest in the companies that I see that they have faith in, and I have invested in them. And I have felt a bit of fear personally this week in some of my decisions to follow ARK, but I think the regular updates really help to ease those fears. So the last thing I want to do is just have a look at the spreadsheet that I maintain. So I've filtered on the key moves this week. I just want to say that obviously these are just looking at shares bought and sold and not looking at the value of the shares. So there could be a totally different picture if you were to look at the value of these transactions. But the top 5 stocks this week are Twitter, over 4 million shares sold. Then we have Palantir Technologies, 3.4 million shares. Opendoor Technologies, 1.7 million shares. CM Life Sciences, which is one of the stocks I've purchased, 1.5. It's pretty heavily down this week. And then finally Teladoc Health, over 1 million. I'll just mention a couple of others there. There's Signify Health and Atlas Crest. They're another 2 of the stocks that I've bought in, which are struggling this week as well. If you look at the movers at the bottom of the table, she sold heavily out with Snap, over 3 million shares sold. Taiwan Semiconductor Manufacturing Co. Limited, over 2.5 million shares sold. Tencent Holdings, 1.8. Pinterest, over 1.5 million. And also Apple, which is a surprise, almost 796,000 shares in Apple sold, which is pretty surprising, I would say, and will certainly have served to free up a lot of funds. So that's where I'm going to end it today. Really interesting week. So much has happened, and I expect that to continue next week, but I'll leave it there for now, and I'll certainly be following up again next week. I hope everybody's had a good week, and I'll speak to you all again soon. Thanks.